Good morning, everyone, and hello to guests joining us virtually as well. Thank you to the IGE founder Dr. Sagong and Chairman Kwang Woo-jeon for organizing this important session. I'm honored to be among such distinguished guests and honored to be speaking just after great Professor Robert Merton. We have all been talking a lot about COVID-19. But despite all the talking, the only thing we know for sure is that we cannot be sure of anything, at least in the short term. We are not sure whether there will be a second wave of COVID-19 infections. We are not sure if there will be a vaccine, and in terms of recovery, each country will recover at its own pace, depending on its economy, policy level, and culture. So, what can we do with so much uncertainty? Acknowledge it and prepare for as many possibilities as we can. At KIC, we are considering various types of potential market recoveries, and we are running stress tests to figure out the impact of each. The good news is that we are okay with the uncertainty, because as a long-term investor, we are comfortable with it. And one thing we do know is that long-term, the world will recover eventually. A second wave of infections could come, but I'm confident it won't change the course of recovery, just the speed. In this time of COVID-19, a long-term stance makes a big difference. Founded in 2005 to efficiently increase national wealth, this year we're going to celebrate the 15th anniversary of KIC. KIC, at this stage, we manage about 157 billion US dollars. We invest in both traditional and alternative assets with a long-term perspective. And we don't focus too much on short-term events. So in a volatile and uncertain financial environment, and considering our mandate to achieve stable risk-adjusted returns, KIC's approach to investing is all about balanced asset allocation. Today, I'll be talking for a few minutes about two things: how the world may look post-pandemic, mainly from investors' point of view, and how this will affect KIC's strategy. We have been paying close attention to expert forecast about the life after COVID-19. Our picture of the future has four main traits. First, it will be a deglobalizing world, as previous speakers highlighted. This is already happening as countries close borders, impose entry restrictions, and limit trade. And the countries will probably keep doing this, especially as the deglobalization becomes politically motivated. Second, life has become virtual, so we will need proper digital infrastructure. Our online lives will expand, whether we are having conference through Zoom and WebEx, like we are today, shopping online, learning online, telecommuting, and telemedicine. So more investment will be made in digital infrastructure. And this will encourage even more innovation in things like artificial intelligence, robots, and virtual reality. Next, ESG. We used to concentrate on E, the environmental factors, but the impact of the pandemic has helped us to better see the world social leaders. So investors will pay more attention to the social part of ESG. Lastly, we will see developments in healthcare industry. We live in an aging society, and we are in the middle of a pandemic. We have also seen how the global healthcare system needs to improve. As a result, countries will be investing more in various parts of the healthcare industry. So what does all this mean for KIC? It means that we will focus on sectors that meet our changing needs. For example, in a less global world, we want to have a strong global supply chain, so companies will be looking for ways to secure domestic or regional suppliers to make sure just in case. At KIC, we look for the beneficiaries of these changes. For digital infrastructure, we will have to use more non-face-to-face services in an almost contact-free economy. So KIC will look for investment opportunities in e-commerce and software companies. Also because we have less physical contact, we will have to strengthen our virtual connection. So we will invest more in content platform that can connect us, also in ultra intelligence and ultra connectivity. For all this to happen, we need proper digital infrastructure. So KIC will continue to take a great interest in areas like data centers and telecom infrastructure. For healthcare, we live in a rapidly evolving COVID-19 landscape. So we remain focused on companies developing vaccines, treatment therapies, and testing kits. We are closely tracking various companies and looking for timely opportunities based on results of clinical trials. In terms of ESG, KIC has been growing as a responsible investor since we established our stewardship principles 2 years ago. Today, I feel strongly that we need to better protect world's social leaders. Going forward, we will better consider social factors like human capital and employee health and safety. We will make sure companies think not just about their shareholders, but also their employees, customers, and the community. And we have always cared about good governance, but with the recent movement around the world for equality and fairness, we will be sure to invest in companies that practice good governance. Specifically, we will more actively expand firm-wide ESG integration at KIC by considering ESG factors. For example, for traditional investments, we will continue to manage our exposure to low ESG-rated companies through our special companies program. For alternative investment, we will keep doing independent ESG reviews of target companies and assets. And when selecting external managers, we will always carefully assess how they reflect ESG factors in their investment process. This brings me to KI's portfolio approach going forward, to how we will manage our assets to focus on promising sectors. For KIC, it is important that we maintain a diversified and balanced portfolio. So asset allocation is always key in portfolio management. To cope with the current market situation, KIC will more actively conduct asset allocation based on interest rate levels and the valuation of risky assets. We'll engage in more strategic asset allocation. And at the same time, for the short term, we will use tactical asset allocation to take advantage of market dislocation. For example, we tactically overweighted equities through rebalancing in March, and we are gradually increasing our allocation to alternative investment, which makes up 16% of our total assets. Within asset class for equities, we think opportunities based on COVID-19 are already priced in. So in the short term, we will focus on areas where excessive pessimism is making price cheap. And in the long term, we'll figure out which areas can benefit most from structural changes. For fixed income, we will respond tactically by closely monitoring central bank policies, while short-term interest rates are expected to remain low under current central bank policy. We are monitoring for potential long-term interest rate hikes due to increasing government bond issuance for fiscal policy expansion. And in terms of alternative assets, we will try to capture investment opportunities in the promising areas I mentioned and welcome not only co-investment opportunities with GPs, but also investment with other sovereign funds and LPs. In conclusion, and this may sound counterintuitive, I think collaboration will be more important in a deglobalized world, as Professor Stiglitz highlighted at the previous session. But even in a pandemic, we still need to share resources, information, and networks to succeed. Perhaps you have noticed, but it is like how we are moving away from the term social distancing and using physical distancing instead, because we are actually needed to strengthen our social ties while keeping physically distant. I hope that through virtual conference like this, we can continue to work together even when you are apart. Thank you for your listening.